Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. The opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet and have a price reaction from in the other direction. The stock you're looking at on the screen of Best Buy could be deceiving by just looking at the chart. However, I'm going to show you in a couple of minutes there were two positive and profitable trades on this stock this morning. The second thing I do is give traders an opportunity to get my gap trades each and every morning sent to them at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out today to subscribers. It arrived at 9:03 a.m. Eastern Standard Time. Here we go. There were 6 potential gap trades on the board today. Unfortunately, only one hit its level. Now, we're only interested in trading the stocks that come into the specific levels that we calculate as taught in the course at Lazy Gap Trader. These are the highest probability trades on the board. If a stock does not come in to the specific level that we calculate, it's not high probability, and therefore it's a scratch. We don't want it. It's off the board. However, Best Buy did come into its levels today. Now, this stock was actually gapping higher before the open today, and as we got closer to the opening bell, the stock started melting away. However, we were able still to catch 2 levels on this stock, and we'll go over this in detail when we go back to the chart. I say gap lower. Support levels are 59.37, 58.18, and 56.92. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. The rest of the trades were off the board. That's okay. We only want the highest probability trades. Some days we get 3 or 4 trades. Some days we get 1 or 2, and that's okay. We're only interested in taking the highest probability trades, which gives us the best opportunity for profit. Here we are on a 10-minute chart of Best Buy. You can see the first level was 59.37, and this level was put on the board while the stock was actually closer to flat after it came down from what looked to be a gap higher at the open. So the stock opened below that level. Now, traders that have taken the course at Lazy Gap Trader know exactly what to do when a stock opens below what is a support level. The next level down was 58.18. Let's go over to a shorter time frame so we can see magnified exactly what happened. In the first minute of the day, the stock dropped like a stone. The stock closed yesterday all the way up at $62.47. The stock ended up gapping lower, and as soon as the market opened, it dropped like a stone, a little bit through the 58.18, right against what our stop loss limitation is, and then it immediately popped back up, and as you can see, just 2 minutes later, the stock was at a high of 58.85. That represented a possible gain from the entry level of about 67 cents. Sometimes when stocks open and gap lower, they have a wider spread between the bid and the ask. When that's the case, traders understand and know, I've said this many times, we have to give them a little more leeway at times when they have a wider spread. If traders are hitting the bid, meaning selling using a market order, it drives the stock lower very, very quickly. However, you can see the power of these price levels. The stock, like a rubber band, bounced right back over the 58.18 and gave us the type of gain we were looking for, as outlined in the email that went out 30 minutes before the market even opened. Then what happened? That trade was over and the stock continued trading lower. It came right into the $56.92 level, making a low in this candle of 56.76, and then just a minute later the stock was at a high of 57.30. 37, representing a possible gain of 45 cents, right in the sweet spot of what was outlined in the email that went out 30 minutes before the opening bell even rung. This goes to show you the power of these price levels. Sometimes we get a quick reaction for the minimum profit target, and sometimes we catch the low of the day and we get multiple dollar gains out of these stocks. You never quite know which one is going to be which. We have to take what the market gives us. These are scalp trades that at times turn into longer term day trades. But what we can count on more often than not is getting a price reaction in the other direction at these levels. These levels are mathematically important to the stock. They're mathematically important on the chart, and that's precisely what I teach in the course at Lazy Gap Trader. Traders learn exactly why this works, which gives them an added confidence when taking these trades at these specific levels. Everything traders need to know in order to trade the gaps successfully is found in the course at Lazy Gap Trader. Come over, check out the course. This is a strategy that you can use each and every day for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.